Stock prices are not far off from their all-time high, and shares in America's blue-chip companies are fully priced by a key metric. So, it's a good time to remember the sort of mindset investors need in order to increase the likelihood of meeting their financial goals and retirement objectives. Stock valuations have climbed sharply from their lows in the Great Recession. In late 2011, investors were willing to pay only about $12 for each dollar of earnings produced by the S&P 500 companies. But the long economic expansion has restored investor confidence, and the price-earnings multiple on stocks has soared to 18.2. That's a 50% rise in a few years. While the valuation of the Standard & Poor's 500 index is not out of sync with its historical norm, stocks are fully priced. Looking at the bull run over the past 6.5 years gives you the perspective on what's going on now. In 2015 and 2016 to date, stocks have taken a breather following the extraordinary 77% three-year revaluation. Stocks went from being ugly ducklings to become the apple of every investor's eye. In that period, the market's price-to-earnings ratio rose from way undervalued, trading at 12 times 12-month trailing earnings, to recently flirt with overvaluation at 18.2. A correction could come at any time, but that does not mean it will. Since January 2015, the S&P 500 has suffered 2 double-digit declines, and another one could come at any time. That is the emotional nature of the market investors in stocks are facing. Past performance is not a good indicator of your future results, but stock prices over the past 6.5 years have been through a lot of ups and downs, and more volatility is possible with valuations higher these days. Still, the economy is expected to strengthen considerably in the last 3 quarters of 2016, and all key measures of the economy have been positive for many months. So even though the stock market is fully valued and more susceptible to a correction, continued acceleration of the economy is expected. That's what long-term investors must try to keep in mind right now, above all else.